Thank you very much. I just wanted to thank you all for coming. Many of you made a long journey, some not as far, but I appreciate you taking the effort and the time to come see this new venture that we have undergone with Martin Brandt, his fine team, and the company. I think you'll be thoroughly impressed today. I did want to start the day with just one direction that we didn't have loaded in the system. I wanted to have Andy Graves. Andy Graves, as you stand up here, has been on the Thor board for 10 years. Andy is our new chairman of the board, and many of you know Peter. Peter was executive chairman. He is now chairman emeritus. He's still on the board. Peter just wanted to take a little time to kind of step back a little bit. He was here last week for board meetings, but Andy will be around all day today. Great background. Many of you may know him from Brunswick Boats. He was the president of Brunswick Boats for many years. And then we've had the pleasure of having Andy on our board for about 10 years. So I know Andy well, and he's excited. He's really excited for his new role. After yesterday, we drove a cross-camp motorhome to Lake of Constance, and it was an interesting journey. So all good. But no, it was 8 months ago. We started communicating the closing of this deal. For me, it was well into over a year and a half ago that we started talking. I've known Martin for over 4 years. Shortly after he came to the Humor Group, we met at Dusseldorf, and we've had different meetings throughout the years. So for us, it was kind of timing, just waiting to see when it would work out. And January of last year, he let me know that there was an auction coming, and we would be part of it. So far, it's been great for us so far.
And after 8 months now, we are 8 months on our journey together. We are both more convinced than ever that this is a perfect match, our Thor and ESG that goes together. Besides the economic logic of the deal, it was clear from the beginning that we are cut from the same cloths. Similar founder stories, similar cultures, and similar values what we share both of our companies. And we share also the enthusiasm for the most fascinating leisure experience on Earth.
Yes, and for us, it was, so we look at the timing of the deal, but it was probably a once-in-generation opportunity. For us, the time was last year's when we really needed to do it, when it was up for an auction, and we jumped in, and we're very happy that we did so.
Yeah. And even you see our vision statements, these are the vision statements from Heimer Group and from Thor. You see it already on the vision statements that it goes perfectly together.
So today, behind me, you'll see I'd like to introduce our brand universe and what you see from the Thor Industries before the EHG acquisition. Many iconic brands. As many of you know, Thor started with the acquisition of Airstream in 1980, and that's how Wade and Peter started Thor. And just a lesson for those of you that don't know Thor, the name Thor is the TH of Thompson and the OR of Orthwine. Very similar to the EHG is the Irwin-Heimer name, so it's the merging of the names. But these brands provide a wide range of RV products for all different customers throughout North America.
Yeah. And now the EHG brands comes along with it. Now I think I was too fast, huh? Yep.
There you go.
Here we go. Okay. So now the Heimer brands come along. So we have 20 brands. Of course, we have icon like Thor has Airstream, or we have Humor. Humor is the brand in Europe for RV. By the way, we decided that we call it Humor and not Heimer. To acknowledge the German heritage, and so whenever Bob say Heimer, he has to pay €5. We take $5 as well.
Yes.
So we add with Heimer Group our brands. Beside Humor, we have Detlefs, Bürstner, other brands, very famous brands in Europe. We cover the whole range. From caravan to motor caravan to camper van, and also all price ranges from entry to premium to luxury. And with a combination of Thor and Heimer Group, we create the world's largest manufacturer of recreational vehicle. And we are the first truly global player in the history of caravaning, with a community and customer base spanning across the globe.
And with this, us is not just another acquisition. This is truly, it's a turning point in the history of Thor. And for us, the combined strength also means combined responsibility. for society, the environment, and our people. We're joining forces to lead the industry into a new era of leisure experience, connected, social, sustainable, and human. This slide shows the strength in numbers. You look at the net sales from 19, $7.865 billion, over 220,000 units in sales, over 21,000, almost 22,000 employees, and worldwide over 3,300 dealerships crossing the globe. And now I'd like to introduce Colleen Zuhl, the Thor CFO. Got it?
Thank you.
For the numbers.
Thanks, Bob and Martin. And welcome, everybody. It's good to be here. Before Bob provides you details on the view of our future of Thor, I'll spend just a few minutes reviewing our fiscal 2019 results. Our year ended on July 31st, 2019. The data on the slides behind me will represent primarily our full year 2019 results, but I'll focus a number of my comments on Q4, as Q4 reflects a number of the progresses we've made on a number of fronts. Specifically, our Q4 results showed significant year-over-year improvement as we made progress on the integration of the largest acquisition in Thor's history and continued to work our way through the industry-wide correction in dealer inventory levels. In the fiscal fourth quarter, net sales increased 23.3% to $2.3 billion, including the addition of $719 million in net sales from EHG. Bob will review in a moment how we're working on many fronts to drive growth in sales by leveraging a number of growth initiatives, as well as the international growth we expect from the acquisition of EHG. In the fourth quarter, our consolidated gross profit increased year over year by 35.8% to $331.8 million, with gross margins increasing to 14.4% from 13.0% a year ago. The improvement in gross profit margin reflects favorable product mix and the result of a variety of efforts, which improved material, labor, and warranty cost percentages in the North American towable segment, our largest segment. The improvement in gross margins is also a direct benefit of our flexible and variable cost structure, which allows us to flex our production and our costs up and down to meet market demands. In the fourth quarter, we improved our gross margin despite the reduction in sales by leveraging this highly flexible and variable cost structure. This cost structure is a very important asset for Thor and is one of the main reasons we were able to succeed during the Great Recession as we continue to be profitable and generated positive net cash flow from operations during that time. The annual decrease in income before tax was largely a result of the reduced sales and the cost and expenses associated with the acquisition of EHG. So I wanted to highlight a few of those items that impacted the full year's results. Our fiscal 2019 results included EHG acquisition-related costs of $114.9 million and the impact of the step-up in assigned value of acquired inventory, which increased cost of goods sold by approximately $61.4 million. In addition, we incurred a 2.7 million euro expense for real estate transfer taxes associated with creating a tax-efficient financing structure at EHG, which we put into place in the fourth quarter to provide future tax benefits for the company. Also, for comparison purposes, in fiscal 2019, Thor had new but ongoing amortization expense of $25.6 million and interest expense of $66.1 million that were incurred as a result of the EHG acquisition. These expenses will be ongoing, but they're a direct result of the acquisition. I wanted to note that we've heard the call for EBITDA disclosures for some time now, and while we intend to continue to focus primarily on GAAP numbers, we have added adjusted EBITDA and adjusted EBITDA margins here behind me, and in the materials released on September 30th with the filing of our 10K. The breakdown of adjusted EBITDA components are included in our Q4 and fiscal year 2019 Q&A document, which can be found on our website at ir.thorindustries.com. We will continue providing this information in future Q&A documents, which we will issue each quarter in conjunction with the filing of our 10Q or 10K. Thor Industries has a history of excellent cash flow generation. For the year, net cash flow from operations was over $500 million. Our main short-term priorities for the use of available cash are reducing our indebtedness and paying regular dividends. Our longer-term priorities include funding our growth both organically and over time through acquisitions, and maintaining and growing our regular dividends. When the time is right, we will also consider strategic and opportunistic repurchase of our shares. We have a long history of rapidly paying off our acquisition-related debt, as we did with the acquisition of Jayco, which we acquired in late fiscal 2016, and which we paid off in just under 2 years. We view debt as a tool to use as necessary, but now we're very focused on reducing that acquisition-related debt very quickly. Year to date, we've reduced the acquisition-related debt by more than $480 million. To summarize the last few slides, we believe we have a proven business model that historically generates significant net cash from operations. The acquisition-related costs are largely complete. Our flexible and highly variable cost structure allows us to adapt to changing market conditions relatively quickly. And as we look at debt as a strategic tool and not as a part of our permanent capital structure, we seek to reduce acquisition-related debt as quickly as possible. As we look to the future, we're focused on near-term opportunities to improve the balance sheet and de-lever quickly. Bob will provide you an overview of our long-term goals and opportunities in a few minutes. But it's an exciting time here at Thor. Bob, I'll turn it back to you. Thank you.
Thank you, Colleen.
Thanks, Colleen. Always great to see the numbers, and made a lot of progress. The team here has worked hard. Our teams in the U.S. have worked hard, and Colleen's group's done an amazing job. Over the last 10 years of development, as we look at the next 10 years of development, we see steady growth rate, which over the last 10 years has only been interrupted by 2 extraordinary years. If you look at 17 and 18, so before that, it was pretty steady, and then 17, 18 really spiked, and a lot of that we couldn't produce enough product. Dealers really felt like they needed to stock up inventory, and then coming out of that in 19, inventories were high. So as we work through that, we see that as a special moment in time, that as we get back to kind of a normalized growth rate, it's good to remember that 19 was the 6th best year in wholesale shipments, and it was the 3rd best retail year of all time. So coming out of 19, even though it was a little bit of a slowdown, it was still an incredible year for us. Many of you know the results to 19 were strongly impacted by the inventory that I just mentioned. We believe this chart shows the inventory rationalization should be completed by the end of the calendar year. We expect wholesale and retail sales to be aligned. We believe the metrics for the RV industry's future to continue to be positive. A lot of this was reinforced as Martin and I were at the open house. Dealers had a very good summer, late summer. The spring this year was still a little off, but late summer was good, late fall was good. Open houses, fall shows have been good. Hershey was up on retail for us. So we're seeing strong signs as we move into the fall, into the winter.
If you look to the European market, you see in the caravan side, we had a decline in caravan, but in the latest years...
Caravan is travel trailer for our U.S. friends.
Yes, sorry, travel trailer caravan, yeah. Thanks, Bob. Now we see also a small increase, but the growth rate is not as high as it is in motor caravan. You see it on the other chart. The motor caravan is really booming, and in the motor caravan segment, we have a more compact camper vans who are really get a big share. So the camper van is Class B in US. They take a big share of the market, or is really really expanding.
There are many external factors that influence our business, and we need to manage through those daily. We've had a long-term history of successfully managing through uncertainty at Thor. Economic cycles. Thor has been in business since 1980. We all lived through the painful cycle of 2008, and that was tough for everyone. But for those of you that aren't familiar with the Thor story, we remain profitable through the biggest downturn ever, and even through the smaller cycles such as 1998. The industry will have its bumps in the road, but we know how to manage our companies. We know when to pull back at the appropriate times. And that's something we did just over this last year. We pulled back production, right-size inventories. Dealers were actually grateful we did because it really did help dealers make money this past season by not having too much inventory in the system.
Yeah.
Dealer inventories were consistent for 2019. We expect dealer inventories will be rationalized in the calendar year of 2019. We believe it will return to an environment in 2020 where retail and wholesale shipments are closer to parity.
One uncertainty is, of course, the Brexit. Everybody's talking about the Brexit. Nobody knows what will really happen in the end of October. Of course, it's an uncertainty for us, but we believe we are prepared for UK. The perception of our European brands are very good in UK. When the British pound drops, we will have a price issue. We have to increase the prices. That's for all European brands, also for our competitors. But with our brand proposition, what we have, we think we can cover this. So, and the other thing will be that we produce in UK. We have our factory in Consett. We have already seen that the caravan went down, motor caravan went up, and especially the camper van, what I mentioned before, grow in UK. And we have a year ago introduced a new camper van line and produced the camper van in UK. So we see that with our production, even when, of course, we have to buy the chassis from Europe, but we changed as many suppliers as possible to local suppliers. So we think we have a benefit also if you compare it to our competitors. And if you talk to people, some people think that when the British pound drops, we have a lot of retired people in Spain and Italy, and because their pensions are paid in British pound, these people think that these guys has to go back to UK because they can't afford anymore to live in Spain, and perhaps we can change some of these guys to our fantastic caravan and camping world.
And I would even add to that, just going to the dealer meeting in July, the dealers in the UK are quite positive. Even with Brexit, they know it's just they need a decision. But beyond that, people have money, the dealers are in great shape. There are some other manufacturers that have had trouble earlier this year, so they were happy to see Thor supporting their eldest brand, their Explorer company in Consett. So the show was very upbeat. I didn't know what to expect because of Brexit, but they have dealers that are just like the US dealers. They've been in business, 30, 40, 50, 60 years, third generation, but very confident that once we get through that, business in the UK should be strong again. So it was good for me to hear that directly from dealers.
Yeah, and when we decided to invest even in our Consett premises into lean operations and other things, so
yes, and that's what it was important for the factory workers to know that we invested, not a huge investment, but just to kind of lean their operations, to organize, just to show confidence that we feel like we can grow there very much over time.
Yep.
So it was very good. For us, we believe sustainability should be a key focus of ours, and it is, and it always has been.
Yeah, in Europe, it is an important standard of business operation, and it's quickly growing, I think, in US as well.
Yes, it's something that we've done in the U.S. We've had recycling programs. We've had companies be awarded. We honestly just haven't talked about it. So we've realized, we've heard from investors, we've heard from customers. So we're pleased to announce that the Thor executive management team has added a sustainability committee to support our ongoing commitment to the environment, health and safety, corporate social responsibility, corporate governance, sustainability, and other public policy initiatives. So today, on your Investor Day app, you will be one of the first to see our first ever ESG report. So it will start uploading today as we're here. Give us feedback throughout the day as you look at it. Also in a few weeks, we will have the new sustainability website that will be live and updated, as we always have projects that fit this area. So it's a great story as you look in it, just as we're working with the school systems, we're working with our recycling programs. It's pretty cool. We're proud of it. So I'm happy to get your feedback as you guys look at it today. But we believe in the double bottom line, financial performance and social responsibility. So now we'd like to talk about some long-term growth drivers, which we believe will be part of the foundation of our growth well into the future.
So one is work lifestyles. They are rapidly changing. We believe that the new focus on work-life balance is a trend towards mobile work, and that will impact the RV sales positively. If you can work from anywhere, why not work from a modern, fully connected RV set in a beautiful location?
Yeah, if you can imagine, you're in your Airstream, you're in Malibu, you're working, you're parked up to the ocean, and you're working from your home office, your RV that you use just part-time. Some are already doing that. We think this is just one more growth driver for the industry.
Like you enjoyed with Andy yesterday on the Lake of Constance, the cross camper.
Yes, the only problem, don't drive it into a parking garage, you might get stuck.
And of course, digital, you can see it outside. We talk about virtual reality. Living in a digital world brings a lot of challenges and opportunities. We believe from a long-term perspective that will be a driver for our industry. We are seeing customers trading in vehicles for a new model, not because they are old, not the customers' the vehicles, but because there is a new technology. So this new technology drives customers to buy new RVs. In Europe, the average time to hold an RV is 20 years. And if you get this back to, let's say, 15 or 10 years, that is a huge potential for us. But digital will transform the way we build, market, and sell our products and how we communicate with our customers. So at the moment, a dealer, he has a lot of vehicles to sell. He is outside the cities. With VR, we can have a shop inside the city and show, perhaps with one car, and then with virtual reality, the different options. So we get a totally new customer base to us, away from a traditional campers. To sell especially our compact cars, the camper vans, as a second or third car. And not only for the purpose of leisure, but also for a weekend and for multi-purpose. So this is where our combined size, Thor and ESG together, will scale and give us a competitive advantage to innovate in a digital future. Many of our mid-sized competitors can't do that. For example, we are developing the smart technology. You will see it later in the breakout session that makes RVing easier and more comfortable for the customer. Here, our smart caravan unit in Europe and the IN command control system in North America are two great examples of our power to innovate. We believe that innovation is one key to leadership. So now, the fun part of the day, what you've all been waiting for, and we've heard investors asking for some time, and they would appreciate a little bit of a financial outlook for Thor that outlines our vision for the future. So today, I'd like to share with you our vision for our goals through 2025. There are three important items that reflect metrics we will manage to, and this will show our confidence in the future of the industry. You really want to do it? All right, let's go. Okay. So we've established three goals by the end of 2025. On a consolidated basis, we expect to, 1, achieve $14 billion in sales, net sales annually. Second, to attain sustainable growth margin of 16%. And the third is to generate over $3 billion in cumulative net sales from operation, all by 2025. So this is more vision than we've ever given before. I know we'll have a lot of questions over this later, but this is something that just shows as we look at the combined companies,
Even though this year was a bit of a dip, we look long term. And we see the long-term growth from our partnerships, from our executive staff to our teams down to product development, technology, building of products. There are so many opportunities that as we look at it, we feel that these are goals that we can achieve. So $14 billion, it's a big goal, and it's one we think we definitely can achieve, and it's with these three objectives. Part of it, it's grow Thor and EHG organically. So we all have new products coming online. We just launched 2 new Class Bs at Open House. We had new products come from all of our companies, new floor plans. So organically, I know that Thor in the U.S. Has a lot of plans, but going through the Dusseldorf show, I was very impressed with everything that Martin's team produced as new products, as more organic growth. 2, grow through value creation initiatives. It's product development, which I'll talk about in a moment. Also to grow net sales through carefully targeted acquisitions. Now, Colleen, I know this is after we pay down debt, so she's done a nice job so far paying down debt, but a little bit more. And then as we get through that, it's part of the reason we looked at Europe. People were talking to me several years ago. They looked at the U.S. We're running out of opportunities in the U.S. For Europe, it's still not as consolidated, and there are long-term opportunities for us in Europe and around the world, really. Yes. So this has given us the long-term growth generator that we feel are definite opportunities as we work together to grow this EHG brand. As I said, this is an aggressive goal, but we really have high confidence that we all together can achieve it.
Yeah, absolutely.
As I said before, we will grow by value creation, such as new product introductions, a good indicator, and excellent feedback from the dealer open house. Martin was at the open house with me just for a few days. He left a little bit early. He didn't get to see Keith Urban.
Yes.
But we had an incredible open house, and for those of you that didn't get to come and you've been in years past, we set up the RV Hall of Fame. We have all of our companies come in. Last year we didn't have Jayco. So this is the first year we had all Thor companies in one location. It was very convenient for the dealers. The dealers really liked that. But we also did a partnership with the RV Hall of Fame, and we have a many year lease that we helped improve their grounds. So the mulch, the mud, everything is gone. And we added a permanent building rather than the tent. And as you look at it just from an investment standpoint, we were spending a lot of money for a tent, generators, mulch, things that we could never recoup. So it was a bit of an investment in the Hall of Fame, but it's a partnership. So having the new venue, the new building, we didn't name it Thor. We had naming rights, but we named it the Peter Orthwine Pavilion. So we actually successfully surprised Peter. He thought he was coming for a ribbon cutting, so it was a good touching moment that we choked him up. That was a proud moment of mine to get to Peter. So the dealers, they liked that, but then more than anything, it was product. They liked the product that we launched from the U.S. Keystone's new Montana was a hit. Our new B-Vans from Thor Motor Coach. Jayco had several new. Heartland had several new toy haulers. So dealers like product. Dealers also, they share with me at that time that they were consistent. Their inventories are coming down. They had great summers. They had great fall sales. So a lot of positives. The dealers just are in really good shape. The only caveat, just our customers north of the border, Canada is a little bit off, but for core North America, we felt pretty good coming out of open house, strong sales. And then additionally, we shipped over six EHG brands, Class A motor caravans, several B-Vans, and several travel trailers. And I'll let Martin take it from here, but our dealers, they love them. We wanted feedback. We didn't know what they were going to think.
Yeah, we shipped the products to open house to get a direct feedback from the dealers. And I have to say the feedback was very, very positive, much more than I thought. Just to give you some impression, so from appearance and design, they said, please don't change anything. They said, you see the Touring 820 outside. they said it's a yacht feeling what you show us. So Andy liked that very much because he worked in boats before. It's a great quality in finishing, impressive craftsmanship. So that was the feedback from the dealers. Of course, we had also some complaints. Air condition, fridge is too small, but these are minor things. So we see a big opportunity for the European brands and products in US. When I talked to dealers and said, but is it cannibalization to the US products? They said, definitely not. It's different buyers what we will sell the European RVs to. So it's not a cannibalization. It will open new markets for us in US.
So this was just a few weeks ago. So we were all just didn't know what reaction would be. But as Martin said, it was basically air conditioners, generators, holding tanks, a few items that they're under weight restrictions in Europe. We don't have them in the US, but the look that you'll see when you go out later today of the Ariba Touring, the deadlifts trailer, the motor caravans outside, that fit and finish, as Martin said, many look like a yacht, and they really like the feel. So this is one of those things we'll see where we go. Next steps, we're just getting the feedback, and it was very, very German. We had product managers with iPads taking surveys from dealers, getting very good feedback. So for me, I'll go into the next stage. To achieve this 16% gross margin goal, we're focused on, one, operational excellence and implementing best practices across the company. And this goes both ways. This is something we've already had probably half of our operations people and product managers through the deadlifts plants in Isny, the Humor plant here in Bad Waldsee, and then go up to the Dusseldorf show. But just having people go through factories, they get ideas and they see things. It's things that I can't describe. I'm 10 years out of operations and I've forgotten most of it. But they're noticing things already, and his team, likewise, have been to the U.S. several times. So best practices will be, it's just something that we do in the U.S. already, but when you combine the high quality that you'll see when you go through the factory later today, that's just a huge opportunity for us. The next thing is procurement savings from new internal program on sourcing. We have a global sourcing manager. Chris Workman came on board less than 3 months ago, and we feel that there are just opportunities as we work with current vendors. We have vendors from the U.S. that would like to come to Europe. We have vendors from Europe that would like to go to the U.S. We're looking at all of our options, but we intend to optimize our material purchasing to use the scale of our combined size. Here you see a selection of categories we're targeting for price optimization. And then the third thing is quality. And it's apparent when you look at their products, you go through their factory, much of it is built in. It's in their lean operations. It's the way they put them together, but it's the way they're engineered as well. And we know their warranty costs are quite low. And for us, we see that as an opportunity to not just lower our costs, but to create a better experience for customers in the U.S. Everybody wants something that's put together just a little bit better. And so if we can take that to all of our companies, and then maybe we focus on some of the Humor direct brands that come over, this is just a huge opportunity. So Thor's business has a history of generating strong cash flow in operations. In fiscal 2019 alone, we generated cash flow from operations of more than $500 million. We expect that to grow year over year. We believe our goal of $3 billion in cumulative cash flow from operations by the end of 2025 is very attainable. We expect to use this cash flow to quickly pay down debt from the acquisition.
And we already talked about innovation. So we think innovation is very important because this provides us a competitive advantage and a barrier to entry. So we differentiate ourselves from our competitors, so we get a price premium on the market. Our scale, what we have now, together for in EHG benefits on ongoing innovation, and we will continuously invest in innovation. And we work directly with top-tier manufacturers, with OEMs, but also with top automobile suppliers. In the past, perhaps they didn't talk to us because we have been too small, at least in Europe. But now with our group, we can talk to them, and when we talk about top technologies. GM is an example. In US, Mercedes, we have a very good relation to Mercedes. We have a strategic partnership with Mercedes in Europe, and that is not possible for competitors to have this close relation.
Yeah, and even so for us, we had a relationship with Mercedes, but as we come in with the EHG group, they were already number one in the world. So now collectively, we have this partnership that it's developing of products. Talking to them about what new products from Mercedes could come to the United States. So we've had some really interesting conversations with all of the chassis suppliers, and for us, we have relationships with Ford. We also have, through our Keystone brand, the GM partnership where the GM truck is connected through our units, and that was a 3-year partnership. So just with scale, there are more opportunities. They have their innovation camp. We've got an innovation group in the United States. They're getting together, sharing these ideas, and with scale, it just makes it more attractive to other people to partner. And typically, we're one of the first ones they call now that we simply see that growing as an opportunity. And as we speak innovation, I can't not talk about this, but I've shared with a few of you already. When we were at the Dusseldorf show, we had many interviews, and many people will talk about automation, battery technology, what is the vision of the future. And I will tell people that to many customers, investors, the future of the industry is to get in your battery vehicle, type in your address, and wake up at a campsite. So I won't give it all away, but if you go out and you do the virtual reality that's out in the little area, I didn't realize I was talking about a lot of what's on there, but it's very cool. And so look at that. But that, to many, that's the vision of the future, along with the cross camp out there that you can pick out interiors and things such as that. So technology is something that I think we'll learn a lot from them. We'll try to teach them a little, but overall, it's been fun to get to know each other. And for me, this is the team. So many of you know me, you know Colleen, Ken, Todd from the U.S. Thor team, Martin Brandt, Stefan Juncker, Jan de Haas, head of sales, and Jan Franke. Most of them are here today. They'll be here to answer any questions. But it's our two teams that have really come together, really through even the acquisition, but then post, we started our meetings right away looking at synergies and projects and best practices. So the groups have worked very well together. Martin and I have worked very well together. We make fun of each other at times.
Sometimes.
But it's been a great relationship. So this is the team that will lead the growth.
Yeah. And Jan de Haas is not here because we have now the fairs in autumn, our fairs, and so he is our CSO. Of course, he has to be on the fairs to meet our dealers. So he is this week is Birmingham, and then he has been in Utrecht and in the other fairs. But we have Stefan Juncker. Would you like to stand up? This is our CFO from the Erwin Group. And we have Jan Franke with us. He is the COO, heading manufacturing, procurement, and R&D. That is new for us, that we have a whole added value in one hand, because we think that is important for the future.
So as we kind of wrap things up, the Thor investment proposition. We're clearly the world leader with competitive advantages. It's a lot of things we talked through today, the best practices, the synergies. We feel this really puts us one step ahead of any other company in the US, European, the world caravanning industry. We're focused on operating excellence with highly variable cost model. We've got an experienced international team. My group, with Colleen, Ken, Todd, and I, we have each anywhere from 15 to 25 years experience in the caravan industry. Martin's team, many 4 or 5 years, but a great deal of international, large business experience that they bring to the table. These are things we work together and we learn as we look at other opportunities. We look at the company, we have a history of a very strong cash flow from operations. Even in the Great Recession, we made money. So even in the toughest of times, we cash flow. There were other companies that went out of business. I lived through Fleetwood and Monaco, and I was in the industry when those big companies just weren't managed correctly, and it's something we talk about all the time. We'll always manage our company in a way that we won't let that happen. We're tightly focused on cash, and so we cash flow very strong from our operations. And we demonstrated a successful track record of organic and acquisition-driven growth. So our companies are poised to grow in the U.S. Martin, I was very impressed at the Dusseldorf show with all of the new products they came out and their focus on the future. They're not just looking at today, they're looking at the future as our companies that we always look 2-3 years down the road. And we've now given you a vision to 2025 of where we think directionally the company's heading. And for us, we think this is something we can achieve, and it's something that it can be even better as we work together. We learn more every day. So it's been a great acquisition for us. Yes, it was the biggest one in our history, but I think today you will see why. As you go through the family museum, this facility is amazing. And again, we don't own this. The foundation owns it. The family's still involved. But it's an incredible museum that talks about the caravanning industry in Europe, which is as old, maybe a little bit older than the caravanning industry of the U.S. So you'll enjoy, the different pieces from the museum, the factory tour. I guarantee you, you will not be let down. It is more automotive than RV, if you're comparing it to a U.S. RV company. So this is something, we had our board here last week, and it was great to see them, many for the first time, just smiling from ear to ear, looking at the quality of company we bought. This is a great company. It's great hard assets. We own all of the production facilities, and they're all very similar to the one you're going to see. So with that, here we look at the business together, and this is what Martin and I had at the Dusseldorf show, and with this, we are under one sky.
Yes.
So, it's all good.
Thank you.
Thank you.
Thank you.